Hey everyone, welcome to another edition of Silver Bullion Television. Hope everyone out there is doing okay, whether it's your Sunday night in the West or your Monday morning here in Asia. What we're going to be doing is we're going to have Gregor Gregersen, founder of Silver Bullion. He's going to be joining us live. So if you have questions for him, what you can do is type in a capital letter Q to let us know it's a question, and then we'll see if we can go ahead and give him those questions. We're going to be talking to him about the reserve, the progress of the reserve, which is going to be the world's biggest silver vault by capacity. We're going to be talking a bit about stagflation, inflation, what gold and silver can do during these environments, and pretty much just putting in your questions for Gregor. So whatever you want to ask him, let us know. So go ahead and type in that big Q, and I'll be with you guys in a bit. Um, Again, I'm also interested to know your opinions on the inflation rate coming in at 9.1. What are you guys seeing? What are you guys feeling with that? And if you're still understanding the what gold and silver can do for you and how it should be reacting. So we'll talk about these things as well. So I'll join you in about 35 seconds or so. Hang on tight. Harold B, how you doing? XMB, Seymour Rivers, how you doing? Let's see. Pavar, good to see you again. Chris Primer, Henry, Patrick Bateman, good to see you again. The Mick. Okay, so we'll be with you shortly, and hang in there. Just let me get a few more sips of coffee going. Thanks, Seymour. Appreciate it. Hello again, everyone. Welcome to another edition of Silver Bullion Television. I'm your host, Patrick Vieira. Glad you all could be here. Today's going to be a bit different. As mentioned, we're going to be doing a live interview with Gregor Gregersen, founder and CEO of Silver Bullion over in Singapore. And as many of you know, SBTV is a part of Silver Bullion. Gregor is also the founder of the Safe House, a precious metals vault in Singapore, one of the founders of Cash Gold, Gram Chain, and the Reserve, which is set to be the world's largest vault by capacity over in Singapore. So with that, Gregor Gregersen, I'd like to welcome you on board. It's been a while since we had a chat. How are you doing?
Very good. Thank you for having me.
Glad to have you back. Gregor, for those that don't know, could you give us a brief background about yourself?
Yeah, you already sort of mentioned all of these things. We started at Silver Bullion back in 2009. That was a direct response of the financial crisis in 2008. I used to work as a senior data architect for Commerzbank, and I basically saw the financial system come to a halt, almost literally. And it became very clear that when you have a systemic crisis, it makes a lot of sense to own something which does not have counterparty risk. And so gold is something that you can own, and it's not something that's dependent on somebody else's promise to pay. And so we sort of endeavor to store and provide liquidity on gold and silver in a way that minimizes that counterparty risk, using insurance, making sure that bullion is real, making sure it's your property is not on a balance sheet, we cannot encumber it, and doing all these other things to essentially prepare that gold and silver to be stored and be prepared for a systemic crisis, whether it's a type inflation, whether it's another financial crisis, nationalizations, and so on.
Okay, and with all that, you also have the building, the reserve going on. And for those that don't know what it is, can you tell us about it and the progress of it?
Yeah, so we built our own. We started our own vault back in 2013 or so, and we did that because when we used commercial vaulting, the insurance had a big issue because mysterious disappearance was not covered, and there was an issue with nationalization because in case of nationalization, most storage contracts specify that any country can nationalize gold. And we are saying we're in Singapore, it should only be Singapore. So the only way to make sure we can cover mysterious disappearance and that we only have Singapore jurisdiction was to build our own vault. Um, but when I mean on vault, we just had our own vaulting facility and we were renting space in another place. So by 2020, we had run out of such space, and we had grown a lot, and we essentially had to look for our next step. And that next step meant that we should really own our own vault. And so we spent quite a bit of time looking for a location, and we found the location of a new vault. We got, I think, extremely lucky with it. And that's essentially the facility which we ended up buying back in 2020, 2021. And we spent the last couple of years designing and preparing for the renovation to make this facility into what it's going to become, which, among other things, as you alluded, is going to be the highest capacity vault worldwide. We have verified that with a number of news agencies which track these things. And so it's quite exciting. Essentially, going to give us enough capacity, for a very long time. If you can fill it up, it will be amazing. It can store 28% of above ground silver reserves worldwide, essentially.
Okay, I got a few images here. If I could just bring it up, and then if you could just walk through it with the people to let them know what it is.
Okay, so I'm not sure whether all readers have seen the actual design of the facility, but the cladding around it is a facade is made out of onyx. It's a 1 centimeter glass, 5 millimeter onyx, 1 centimeter glass, and you put a light behind it. This view is from inside. You have this onyx sort of look, and when you're looking at it from the outside, you have this golden hue. So essentially, what happens during the day when light comes in, you get a golden hue like this inside, and then at night, by putting LED lights, as you just saw, you reverse that effect, and you basically have this gentle sort of glowing building. Why are we doing all of this? Well, we essentially want to build an iconic vault. Vaults are either built as what I call a hole in the wall, meaning it's a place you don't want to bring customers, oftentimes not because of security, but because it's just embarrassing to show somebody. Or you're building something that stands for something and where you want to bring customers and show them. And this facility really is not just about being a vault, but it's also what we call an alternative asset center. So besides gold and silver, we are planning to store quite large amounts of rare earth metals because we have secured storage, and these metals are can no longer be stored in unsecured warehouses. Insurance companies no longer allow that, which means there's a big shortage in the industry on where to store these sort of metals. And we have that kind of heavy duty capacity and the security to do it. We have luxury watches where we're going to have a watch workshop coming in, and we are basically going to take high-end watches and we're going to provide more liquidity and securitize them in some ways. And then we got permission to run auctions in the place. So we will be able to host art as well. And we're in talks, with potential companies like Sotheby's and so on to potentially come and bring that in. So really you have 4 different asset classes which are going to be in that building. We have about 32,000 square foot of lounges and meeting rooms. We can host events. We have like a full-scale barista. We're going to have a full-scale kitchen. So it's a place which is meant to be alive, doing all kind of things that banks either choose not to do or cannot do. And along with it, will be able to authenticate goods. We'll be able to collateralize goods using the peer-to-peer system, which is going to be expanded to cover some of these other aspects. And we can digitize things through cash. And so that's sort of what this building is going to be. So it's not just a vault, it's really something much bigger. And we found that all these different services sort of become synergistic, meaning that you do one of these things, and it's create a benefit which is going to improve the other services. So, for example, if a wealth manager is going to bring a client to the vault, maybe he's not bringing it because he's interested in gold and silver. Maybe he's bringing it because he's interested in watches, and we have a bonded vault where you can collateralize watches. So they might be coming for that reason. And so as they come in, they will have this view into what will be the world's highest, largest silver vault. And as they see it, they might get interested in silver, they might get interested in gold. So we might be getting people going from luxury watches into gold and silver, because at least in Singapore, it seems to be that at least 10 people which are interested in watches for every person that's interested in gold. And that's a way to sort of get people more interested in physical precious metals, which is something which is very key, and something that the industry needs to do. We need to get people to understand the importance of counterparty risk-less precious metals.
Okay, got a question came in here. I don't know if it's a confidential one or not, but how much in USD to build the storage facility?
Yeah, so we managed to get the building at an extremely good price in the middle of COVID. And what makes the building somewhat unique is the structure. There's a huge sort of room around which the building is built, and it was used for logistics. And I think that made it somewhat difficult for other buyers to buy it because they didn't quite know what to do with it. But for us, it was perfect. So we managed to buy this building at 18 million Singapore dollars, which in US dollar terms is probably around 13 million US. Um, which essentially we were able to buy this with 2020 profit. 2020 has been very good for us. And now the renovation actually is going to cost, more than that. But you know, we we will be able to pay for all of it cash if we really have to. But that will throw down our inventory quite a lot. So um, we're going to finance about half of it, and the other half, I'm hoping to be able to pay that with ongoing profits. Because when you build a renovation like that, you don't have to pay that in one go. You are basically distributing that cost over 2 years, and so that's the idea right now. And what really drove the costs down for us, which we got very lucky, is say when you build a building like this high end, you end up spending almost 30% on the architect. And in our case, we managed to convince an architect to leave the very high paying, glamorous job to come do the project. And they're doing that because if you are an architect and you're working for somebody and you want to create your own company, you need a big project to get out and to um, start your own brand, your own company. And so that's his opportunity. And that basically means that instead of spending that 30% of project cost, we're spending a small fraction of that. And this architect is really extremely talented, as you can see from the images and the renderings and so on. And then what we found out is when you're building a building that is unique, everybody wants to work with you. So suddenly we managed to get 40, 50% off costs because we're telling them this is going to be the world's highest capacity vault. It's a unique design. Do you want to have it in your portfolio? If you do, well, here's a competitor of yours which is willing to do it at this price. Are you going to, want it or not? So we were able to really take that cost and I believe reduce it by 40 or 50% of what I would have had to pay if I would do a normal project. So that's a lot of love and passion and work going into it by almost everybody on this project, and I think that's how we are managing to pull off such an impressive building. Um, yeah. Mm.
Okay, yeah, I've seen the building is absolutely huge. I've seen the when they tested the lights for the Onyx, it's absolutely beautiful. You guys got to see it. But Gregor, how has the demand for gold and silver been in Q1 and Q2 this year?
So Q1 has been quite healthy. Q2, in May and so on, demand sort of suddenly started sort of going down. There wasn't really that much. June also so on. So, but now it has sort of picked up quite a bit again. And what we're seeing is more demand for gold than silver overall. And when it comes to what people choose to buy, I mean, in our case, a lot of it is storage. So really, we're selling a lot of barrels more than anything. Um, Coins are still sort of hard to get, but the barrels, overall is not a problem.
Okay, and are you noticing still bottlenecks, let's say, or shipping delays coming in with product?
So maple leaves and American eagles, I think as most readers know, that's what a lot of people in the US are interested in. Those are still very hard to get. So, and I think the premiums are still very high. So we don't sell a lot of them. There's been a few interesting sort of developments. Royal Canadian Mint, the British coins are getting quite popular, and um, because Britain left the EU, there are now taxation on British coins going to the EU. So it essentially makes it easier for us to get those Britannia coins in. Um, but it's, given current premiums for coins, I normally tend to tell people, well, unless you get a good, lower sort of good deal, you're probably better off buying bars rather than coins and sort of wait for those premiums of coins to sort of start coming down.
Okay. And I mean, speaking of the premiums, how about how about them? I mean, I always get the question, especially here, people are asking, hey, are we going to see premiums coming back down? Are premiums going to stay? What's your take on these premiums?
So if there's a shortage of silver, for example, or gold, you're going to see premiums of, say, 1 kilo gold bars and 1,000 ounce silver bars going up. And that's what we had during the pandemic, right? So right now we are not having those premiums go up so much. So what that tells me is it's not a matter that there's a shortage of silver and gold right now, physical. There's a shortage of coins, and that just means that the production, the mints, which are converting the silver into coins, minting those, um, they have more demands that they can fulfill, and the market is willing to pay a premium for that. Now, I did speak at a recent conference with one of the very large mints, the production manager, and I asked him, why don't you guys increase your production? And the response, usually is the same, which is that it's sort of a boom and bust sort of circle for them, where sometimes people just there's not enough demand for these coins, so they end up kind of not using the minting equipment because the demand isn't that high, and then suddenly demand goes way up. In this case, of course, demand has been on for a long time, right? I mean, since the pandemic, these premiums have gone way up. Um, but they're always afraid in investing in more minting equipment because they're afraid that they're not going to be utilized when the next sort of demand bust period is going to come. And I've sort of been telling them, look, if we've been selling a lot of our coins, I mean, me personally, I basically sold all my coins back in 2020 when the premiums went up to $10, $11, and I converted all into 1 ounce silver bars because I got a lot more silver. And I've sort of been telling them, look, maybe we can make a deal. We've got a lot of silver bars. I'm sure I can ask my customers when things go down if they care to switch their 1,000 silver bars back into some sort of monster boxes. And we keep your minting capacity sort of going. So I'm kind of coming with that approach because, yeah, we need more minting capacity, and we can reassure the mints, that they can keep the machines on when demand isn't that high. And for long-term storage holders, I think there's quite an interesting arbitrage opportunity here. When coin premiums are really high, sell your coins and get silver bars. And when these premiums are going back down, maybe you could consider selling that silver bar and going back into the coins at a low premium. So I think it's quite interesting, but I wouldn't be a big buyer of coins at this point. I'd rather go with bars.
Okay. And Gregor, you also recently attended the Asia Pacific Precious Metals Conference. Can you tell us what it was and what were the things that were discussed there?
Yeah, so the precious metal conference, to give you an idea, it's basically people, the LBMA, the World Gold Council, JP Morgan, all the big banks, all the refiners, logistic providers, they all kind of meet, and it's once per year. Of course, the LBMA conference, which is going to be in Portugal this year, and normally the one for Asia tends to be in Singapore. It's kind of grown into those Asian event. And this year there was a lot of interest, a lot of demand about digitalization and tokenization. And what I normally see is a lot of people are interested. A lot of people feel that they're going to be left out if they don't go into this somehow, but they don't really know what it is. And so they're using all these terms, but I sort of suspect that they might not quite know what that is, and sort of waiting for somebody to come up with a solution to give them which fulfills all their needs, but there's no such thing. So um, that's sort of one thematic which kept on going, hearing all the time. And I think the other interesting part was, the presentation of one of the chief economists of one of the very big banks out there, forecasting his um, out view going out. And he kept on talking about high inflation and low growth and so on and so on. And then finally I raised my hand and I asked him, look, it's stagflation, right? And he said, and his response was really interesting to me, because what he said is, well, we don't want to use the S word. Now, stagflation means high inflation and low growth, and we are in high inflation and low growth, but let's leave it at that. And that just kind of shows you how, that establishment is so, I don't know, it just feels like they're putting their head under the ground and sort of pretending stagflation doesn't exist. Because if you look at Keynesian economics, the idea is that you can always control inflation if you increase interest rate a little bit, and you can choose between the two. So having an environment where you get the worst of both worlds is not something they like to sort of admit or talk about. It somehow feels like, it's a failure of the policy and the theory. And so his comment of saying that we don't want to use the S word, it just kind of shows how mainstream banks and the financial system, still kind of seem to think that way. So I'm quite excited with the fact that more and more media now is using the S word, and not censoring it and saying it is stagflation, because stagflation is sort of a period when it's the best period for gold and silver. And the first step to kind of realize that is to realize that we are in a stagflation and we're heading more towards that. And so um, I'm glad that's slowly dawning, in people in the industry and the financial industry as well.
Okay, yeah, we'll touch on that stagflation in just a bit, but why are the biggest industry players looking at tokenizing physical gold? I mean, what's the advantage of tokenizing gold?
So, as you might know, I mean, there's been probably 200 different attempts of tokenizing gold, and these varies from, small mom and pop sort of setups to large sort of crypto companies like Paxos and so on trying to go into gold. And so, um, the answer is every token sort of has their own proposition and so on. The ones that I feel is the most worthwhile is, if you tokenize something, the question is, A, is there gold behind it? And B, can you take delivery? And most tokens don't have a satisfying answer to these two questions. And so we spend basically 3-4 years working on these very two questions. And with our solution, what we're trying to do is essentially be able to create an asset tracking system, which in our case is Chain. We deployed that not just in our vault, but we deployed it in Zurich, in Dubai, in Frankfurt, and in Dallas with IDS. Uh, and we essentially allow people to put gold in any one of these locations, get these tokens, and they're able to take delivery of gold in any other one location. Because we did have clients, at Silver Bullion in the past, saying, what happens if the financial system goes down the drain, and the client doesn't like Bitcoin and doesn't want to be paid in Bitcoin as an alternative. One option as we are creating this token system is for you to essentially be able to take delivery of your gold in Dallas or whichever other vault we're adding. So you have a swapping capability. And just to emphasize, all this digitalization and so on is not done by Silver Bullion proper. It's done by a spin-off cache, which is completely separate from Silver Bullion, because it's always good to keep these things separated. And cache essentially, allows for that redemption at multiple vaults. It allows for the swapping. And the tokens that is being created is what's called an ERC20 token, which essentially means it's freely tradable. And that's quite special because in Singapore, at least, they're quite hard on crypto in general. And whenever a token has any kind of value behind it, it's considered a security token, which basically means the central bank goes in and treats it like a financial instrument, which means it cannot be freely traded. Um, uh, Essentially, can only be sent to addresses which are whitelisted after a very long AML KYC process, which basically makes it kind of useless for crypto purposes, because the idea of crypto is you can freely send it to anybody. And in our case, cash is regulated by the Ministry of Law, not by the central bank. And our requirement is to do an AML KYC check versus a party which deposits or withdraws gold. But once they get these tokens, essentially they're free to do as they please. And so that makes it sort of quite a powerful sort of way of doing things, because there's a potential for people in the crypto world to not go into these stable coins, such as Tether, for example, which is claiming to be backed by the US dollar, but nobody ever had an audit. And so to get these people to back into a token which is always fully backed by gold, and in turn that's going to increase the demand for gold. At some point, we'll probably have a silver token, but our strategy is we need to get gold working first on this environment, and it's a long process to sort of get people trust and get known and so on. So cash is basically working on all of these things.
Okay. And do you foresee many people moving into precious metals for diverse reasons, such as inflation or stagflation, and now even technology making gold and silver more mobile, more accessible to people all over the world?
Yeah, I think inflation is definitely going to drive people towards precious metals. Um, what's always important is what sort of time frame you're looking at, because people would say, oh, inflation is going up, gold and silver is falling, therefore gold and silver has nothing to do with inflation. Well, it's almost always like this. When markets go down, gold and silver, the first reaction is that everybody so has to sell things, including the gold and silver, in the financial market, and that's why things go down. And we also need to build awareness to some degree, why gold and silver, is the thing to own in a stagflation, and why it does so well. Over the long term, it always does very well in a stagflation. And there's this one chart I kind of created where you can really see how much gold and silver go up during stagflation times, and that's going to happen again. So there's an interesting statistic which says that about in the United States, about 0.5% of people's wealth is in gold or silver. That's just physical or paper right now. But at the end of the stagflationary period back in 1981, that was about 6 or 7%. So we can expect, I think, by the end of the stagflation, most likely to see a lot more people owning gold and silver, hopefully physical. And that demand, probably, if you look historically, is probably only 12 to 15 times as high as now, and that's going to drive the price up a lot more.
Okay, speaking of that chart, let me pull it up here where it's the purchasing power adjusted performance of gold versus the USD. If you don't mind, could you go over this chart and tell us what you see with it?
Yep. So it starts back in 1971, because that's the year that the United States defaulted on its gold backing, and that's really when gold became legal to own again in the US, and sort of was priced in the US as well. And so you could really see the diversion of gold sort of having its own price, and the US dollar sort of steadily falling in value. And if you look at history, basically from the early 70s to 80, 81, 82, uh, we had that stagflationary period. And instead of using nominal prices, meaning the price of gold in US dollars and keeping the US dollar steady, I think ultimately we are all interested not so much in how many US dollars you have, but what can you do with the US dollar? Because if it takes $200 to buy an ice cream, what's the use of $200? So it's really purchasing power that matters. And so what I did with this chart is I plotted, the official inflation numbers, which are, I think we can be quite sure they're lower than they should be. But the official numbers from the Department of Labor of the United States, and from 1971 to now. And what it shows is that the US dollar lost 87% of its value, which it's why you see this green line sort of becoming smaller and smaller. And then I adjusted the price of gold based on these inflation numbers. So if gold went up 5% and let me turn off the TV here. If gold went down 5% and the US dollar lost 2%, then essentially gold went up 3%. Can, yeah. So that's basically the idea behind it. And as you see here, you will see that almost all of the gains, the initial gains, for gold, happened in that initial stagflation period. And that period essentially was a period where people started doubting the value of US dollars because you had just broken your promise, right? You were no longer backed by gold. And so a lot of people went into gold around that time, and the US dollar kept on falling and falling in purchasing power because people didn't trust it so much. And it was only with Paul Volcker, the Federal Reserve uh, chief at that point of time, who sort of restored the trust in the United States dollars. And he did it by raising interest rates up to 21%. Now, that's how much pain it took. And I mean, you can imagine there's no way that it can go up to 21% today without sort of wrecking the economy, because we are used to having 1 or 2% interest rate. So, so that's a really interesting takeaway. And then after, the 1980s, essentially you can see that we went for a long, long period where there really wasn't much interest or growth at all in gold. I mean, we are talking about 28 years where people lost interest in gold, and it barely sort of kept up with inflation. And then 2008 happened, and that's when we went into gold and silver as well, because of 2008 financial crisis. Because again, that was a wake-up moment which showed how fragile the financial system really is. And that's when also banks had to be bailed out, and the government started printing all this money with quantitative easing and ultra loose monetary policies, and debts really started skyrocketing and all this stuff. So, and that's when you see sort of the second run-up of gold. And that's sort of why I'm saying that stagflation, that's a period when maybe not at first, because it always takes a little bit of time for people to realize that, but we are going to see a lot of run up in gold because our stagflation, which is coming from a basis whereas the United States just came from deficits of 2.8 trillion. The US has over $30 trillion worth of debt now. If you take unfunded liabilities, we're at over 150 trillion. And back in 1971, when we had the first stagflation, the United States had 400 billion in debt. And last year it took 50 days to make 400 billion in debt. So all that debt that was created, all that money was created, is going to have to go somewhere. And as people still rediscover precious metals, more and more of that money is going to go in precious metals, and that's going to drive the price way up. So one question is, when does it happen? Well, that always depends, but it will happen. And it might not be this week, maybe it's not going to be next month, but you're going to see that increase coming down. And this decade definitely will see gold and silver going way up.
Okay. And I mean, I completely agree with you there. And we had some interesting news coming out from Singapore, the Straits Times, where Temasek believes the fragile state of the global economy flags the risks of stagflation, where growth, excuse me, slows while inflation remains elevated. Mr. Lim Boon Heng, chairman of the state investors, said, "Today we face rising inflation, higher interest rates, a lower growth trajectory, and a potentially recessionary environment in key developed markets, which brings heightened risks of stagflation." So, what's your opinion when you see this? I mean, it obviously is happening all over the world. What should we be doing here?
So, for those who don't know, Temasek essentially is one of the two Singapore sovereign wealth funds. They're one of the largest in the world, and they've been making a lot of money for Singapore, investing in different things. So they're quite well run. Um, yeah, and they're quite straightforward, and they're saying there's stagflation coming. And, it's because of entities like this saying, so what's stagflation? I guess that mainstream media and so on feels empowered to say that word. But yeah, it's essentially obvious. Stagflation is here because we printed so much money in the past. And in the past, I mean, let's put it this way. During the pandemic, the real economy has melted down, and yet the stock market kept on making new highs. Right? I
Right,
mean,
right.
people go, why is that? Well, my answer to that question is, well, they're printing all this money, they're giving it to people, and these people are putting it in the stock market. The market has to go somewhere. The money has to go somewhere. And if that money goes into stocks, like everybody seems to be putting it there, then of course the stock market is going to go up. Um, but the issue is now is that some of that money is flowing into real goods, and so prices are starting to go up. And that can become a self-fulfilling prophecy because as prices of real goods are going to go up, people are going to say, well, prices are going up. I rather fill up that car today because tomorrow is going to cost more. And since the person at the pump is going to say, well, price keep on going up, I've got too much demand now, better start pricing prices faster. That's how we got into the Weimar Republic. But on a bigger point of view, when you have stagflation, the reason why gold and silver is doing so well, or it's going to do so well, is because if you're buying stocks and equity, those are not going to do well because your growth isn't there. Consumers are not spending a lot of money, so you're making less profit. At the same time, your costs are going way up, and your financing costs are going way up because interest rates are going up. So for a company, they're being squeezed on both sides. There's less revenue coming because of low growth, and the costs are going up. And that means that essentially stocks tend not to do well in an environment like that. If you're going to the safety of cash, well, cash is depreciating at 9% right now. You're guaranteed to lose value. That's why gold and silver makes so much sense. If you're going into bonds, well, if you're losing 9% and the government gives you 3%, you're guaranteed to lose 6%. That's why Ray Dalio basically is saying cash is trash. And bonds are trash because you're guaranteed to lose market value. In Germany, in Europe, right, it got to the point where people were buying negative interest bonds from the government. So you were guaranteed to, on normal basis, you give them $100, you get back $99 because getting back $99 is better than getting $98 back because the banks were taking 2% negative charge or 1.5% or whatever it was. So that just kind of shows bonds don't make sense in this environment. And so what's left? Well, real estate. But the problem with real estate is, while it's a real good, the price, a lot of that is determined on financing, right? And people buy a
Yeah.
home not just on based on what the price is, but oftentimes based on how much they can afford each month to service that mortgage. And while in the US you have quite a number of fixed rate mortgages around the world, typically it's hard to get those. Usually it's a variable one, and even the fixed ones they kind of reset at some point. So as interest rates are going up, people are going to get squeezed, and so maybe you can make a $2,000 per month mortgage payment, but if interest rates go up and you have to pay 4,000, suddenly people can afford it. So new buyers, they can only do a 2,000, 2,500 interest rate. And with high interest rates, that means that that price that they're able to afford a home has to go way down. So long story short, in a stagflation, equity is not a good place, most equities. Bonds don't really make sense. And real estate is going to have a lot of hard times as well because of that. And so what are you left? Well, to some degree, maybe crypto, but you've seen that doesn't work out that well recently either. And so gold and silver. And gold and silver is that defensive sort of liquid assets that you can hold, which long term does very well. Gold has gone up 7.8% since 1971 on average. And most of those gains have come during periods of stagflation, which is where we're heading in periods of money printing. So I almost see it as a perfect storm, and it almost seems a gift that gold and silver ought to be so cheap right now.
Yeah, I completely agree there. So, I mean, we saw that chart and it showed how gold and silver did. We saw that stagflationary period back in the late 70s, early 80s. But how about today? What or how do you think gold and silver will do in today's stagflationary environment?
I expect it to become a lot more popular and go up. People sort of have this inklings that something wrong. They had it for a long time. And then COVID came and sort of disrupted that normalcy bias, that tomorrow is going to be just like today. So during COVID, we had 400% increase in sales. And it was our best year ever because people sort of realized things can change drastically. And then COVID is kind of going down, and now we got the Ukraine war, and my gut feeling is that the Ukraine war really is, uh, just the beginning in some ways of a much bigger sort of financial war that is going to come. Because when the sanctions are being put up by Western nations against Russia, well, it only works if everybody participates. And well, China and India, they're buying all the oil, so oil prices are going way up. Russia is selling it to China and India, which are filling up their reserves. Germany and other countries are not getting that or deciding not to buy it. And in some ways, Russia is probably making more money now than they were doing before. So, uh, but at the same time, that's all part of sort of the bigger trend where the world is somewhat tired of sort of being under the US dollar, because the US dollar has gotten so much use, and the US has so much power to sort of tell all these countries what to do or threaten to remove dollar liquidity. So there's this big push around the world to sort of have an alternative. And now that this Ukraine war is happening, essentially Russia is sort of taking the brunt of that. They're off the SWIFT system, and they're sort of showing that things can work without it. And it's encouraging countries to sort of create this parallel, way of paying things, whether it's yuan based or Russia based or gold based and so on, and sort of slowly start challenging that US dollar hegemony. And that's not going to go away, that's going to get stronger.
Yeah.
And so I think towards the end of the decade, with the next 8 years, we're going to see that gradual sort of strengthening of these alternative ways of doing things as we are moving to sort of this one world, which is sort of so heavily US dollar sort of controlled, to a more bipolar system. And in some ways, the Ukraine war, was sort of expedited all of that process. And within all of this, there's going to be a lot of financial turbulence. And again, gold and silver is sort of, that safe haven refuge. I think that people are going to go towards. It's just a lot of people don't foresee that yet, or don't see, how the role of these metals in your portfolio. In the 1980s, people knew about it because they had
Yeah.
gone through, the stagflation period and so on. And so the common advice was put 10% of your portfolio into gold and silver and hope you never need it. And I think that's going to become common advice again. And I myself, of course, I keep a lot more than 10%, but that's going to happen. And so I think gold and silver is going to have a very bullish time ahead.
Okay. I know we gotta get you out of here soon, but one last question, and maybe I'll try and pull in a few questions, comments here. But do you think the Fed can do anything to turn this around and get the economy correct again?
So the Fed back in the 1980s was in a similar situation, and we had Volcker, which essentially said, no matter what, we're going to make the US dollar, a trusted currency and store of value. And he did it by increasing the interest rate to 21%. Can we do something like this again? We can't. In my opinion, we can't, because there's so much debt now in the United States, where if let's say you've got $30 trillion in debt and you're putting interest rate to 20%, how much is that? That's $6 trillion in interest, theoretically, right? Um, that itself is going to hurt, the credibility of the US dollar. So how and it's just too much pain. And what we've seen, I think, is we've had a loss in morals and common sense, I think, of the last 20-25 years, because everybody knows that if you keep on spending more than you take in, something bad is going to happen at some point. And yet we have this modern monetary theory, which seems to be an excuse for politicians to say, no, we can spend as much as we want, and things are going to be just dandy. It's going to be even better because people will always trust their currency. We can always print it at infinitum, and things are going to be fine. And I think we've been giving people excuses to do very bad things, pretending they're not bad things, and been doing that for 20, 30 years. So how do we fix this? We can't fix it, without a lot of pain. And that pain has to come from somewhere. And my expectation is that the Federal Reserve will always err towards not raising interest rates enough because it's painful. And I think politicians and functionaries and so on, they're always going to, rather leave the problem for tomorrow rather than deal with them today. So while interest rates are going up, I think there won't be enough to really uh, recreate that credibility. And keep in mind, a lot of the current inflation is actually due to energy, and that might very well come back down again. But the underlying trend is going towards higher and higher inflation because we have to pay for all these unfunded liabilities, which are many times more than the main debt. And so our deficit is just going to get worse and worse and worse. And that's going to erode confidence. And people are going to go towards real goods. And there's no way around it. So at some point, we have to pay for these 40 years of extravagance in some ways.
Okay, let me just pull in this comment here. Ralph Steiner, the power is moving to Eurasia. Some people like this, some people don't like this, but I think this is something that would you say we have to take a step back and really understand.
Um, Eurasia. So I'm very pessimistic about Europe. Um, I'm originally from Germany, right? I lived in Italy for a while, and Europe definitely is um, going to go through a lot of pain. Um, so, but Asia, yeah, Asia is on the ascendance, and it comes back down to a very simple thing. In Asia, in a place like China, or in most places here, people work. Uh, they're eager to work. They're hungry. They get stuff done. There's not going to be a lot of money for people who don't work or are not productive. You just have to do something, and they managed to build so much wealth here. I mean, if you're going to China right now, it's such a modern place. I mean, it's incredible. So they went from a third world country essentially to what's more or less the most modern country out there right now. And all that wealth and so on, they keep on pushing, so working. And that's kind of why, in some ways, I think it's somewhat inevitable that there's going to be the shift more towards Asia. Um, is it a bad thing? Well, not necessarily. I mean, you look throughout history, and Ray Dalio wrote so much about this. You sort of every 100 years you kind of have a shift towards a new sort of uh, principal power. And the United States will continue to be extremely powerful. But the important thing is that all this hopefully is going to happen in a peaceful way. If you are doing well and somebody else just happened to be doing better, it's not the end of the world. I mean, ultimately, we're all doing good, right? The problem is if we end up fighting each other over something, or having subtitles that we are the strongest, right? Then that's sort of the foolish thing, which I hope we can avoid. So I always like to remind people. I mean, China is ultimately interested in being rich and wealthy. They're not interested in fighting wars. So um, uh, hopefully, as we go through these transitions, we're not going to see any belligerence coming out of it, and it can be done in a way that sort of works out well for everybody. And again, it doesn't mean the United States is going to do badly. It just means that China and some of these Asian countries are just going to do better relatively.
Okay, I know we gotta get you out of here already. So, Gregor Gregersen, founder of Silver Bullion, over in Singapore, and the Reserve, which will be the world's biggest silver vault by capacity. We thank you, and we look forward to more conversations with you. Maybe we can get you on once every month or so.
I love to.
All right, Gregor, thanks a lot. So I'll let you go. Thanks again for your time. And okay, so guys, that was Gregor Gregersen, founder of Silver Bullion over here in Singapore. I appreciate the questions and comments that you had. Um, it is true. Power does seem to be moving, or it is moving from west to east. And as Gregor mentioned, it's these things happen, right? I mean, and the best we can do is have an understanding of what's happening, why it's happening, and maybe even an understanding where we may have to be our own bank, considering what's going on with the U.S. dollar. So, I appreciate Gregor coming on, and let me take a look at a few of your questions and comments as well. Yes, Mr. Blackmore, thank you, Gregor. He says, Razor, you're welcome as well. Um, Yeah, built for tough. Absolutely. Maybe someday you can store in our vault. Why not? Absolutely. You can. It's a very big place. A lot of room there for sure. Let me see what else is out there though. Belly dance, Rabia art. Yeah, it's tough for the young guys right now. I mean, they're seeing alternative assets. They're seeing crypto. They like it. They like the technology and things like that. And but then again, there's also the reality of the old traditional central banks and money printing and things like that. So you really got to feel for the young people. They're really stuck in a hard place, and which is why I feel like it's our job, you and me, to kind of help them along and help them to understand at the same time. They can help us understand some things that they see. So it's a mutual thing there. So it's a great comment there. Let's see what else is in there. Yeah, okay. So okay, comments look okay. Again, I appreciate you guys being here. Held you for almost an hour, and we'll see if we can get Gregor on more and ask him, more questions with gold and silver, economy, inflation, stagflation, things that matter to you. So as always, let us know your questions and comments, and be a blessing. Be a blessing, not a burden. I appreciate each one of you being here. As I said before, we're all in this storm together. Some of us have a yacht, some of us have a rowboat, some of us have a canoe or an inner tube, but we're all in this storm together. So we got to take care of each other, be a blessing, not a burden. And I'll see you guys next week. I'll see you guys next week. Take care, everyone. And as always, saddle up for what's coming ahead and silver up as well. Take care, everyone.